Hey, what's up everybody, and welcome to the channel. If you're like me, you're always on the lookout for ways to grow your money and maximize those investment returns. With 2025 right around the corner, we need to get ahead of the game. Today we're diving into the top 10 ETFs that might have the potential to explode in the coming year. We'll be looking at a mix of growth-oriented ETFs perfect for the long haul, and for you thrill seekers, I've even thrown in a few leveraged options. Remember, investing always comes with risks, and it's crucial to do your own research. Whether you're just starting out or you're a seasoned pro, stick around because I'm about to break down everything you need to know about these top-performing ETFs. Let's get right into it. Kicking off our list at number 1, we have the Vanguard Growth ETF, or VUG. This ETF is a powerhouse in the world of growth investing, offering exposure to some of the most dynamic and innovative companies in the market today. It's designed for investors who are looking to capitalize on the potential for high returns by focusing on companies that are expected to grow at an above-average rate compared to other firms. This ETF is like the all-star team of large-cap growth stocks, hand-picking companies with a proven track record of strong earnings growth. These are not just any companies, they are leaders in their respective industries, often setting trends and pushing the boundaries of what's possible. By investing in VUG, you're essentially putting your money into businesses that have demonstrated their ability to grow consistently over time. Think about companies that are constantly innovating and expanding. Those are the kinds of companies you'll find in VUG's portfolio. From cutting-edge technology firms to forward-thinking healthcare companies, VUG includes a diverse array of businesses that are at the forefront of their fields. This focus on innovation means that the ETF is well-positioned to benefit from the latest advancements and trends in the market. One of the things I love most about Vanguard ETFs is their commitment to keeping costs low. Vanguard is known for its low expense ratios, which means more of your money stays invested and working for you. This cost efficiency is a significant advantage, especially over the long term, as lower fees can lead to higher overall returns. With VUG, you're getting a diversified portfolio of high growth potential without high fees. This diversification helps to spread risk, as the ETF includes a wide range of companies from different sectors. By not putting all your eggs in one basket, you can potentially reduce the impact of any single company's poor performance on your overall investment. Another reason I'm high on VUG is its long-term growth potential. The companies in this ETF are not just growing now, they have the potential to continue growing for many years to come. This makes VUG an excellent choice for investors with a long-term horizon who are looking to build wealth steadily over time. When you invest in this ETF, you're betting on the continued success of the American economy. The US has a long history of innovation and economic growth, and VUG taps into this by focusing on companies that are driving the economy forward. This makes it a great option for those who are optimistic about the future of the US market. If you're looking for a solid, set-it-and-forget-it ETF that can help you build wealth over time, VUG is worth a closer look. Its combination of high growth potential, low fees, and diversification makes it a compelling choice for both new and experienced investors. Whether you're saving for retirement, a major purchase, or simply looking to grow your wealth, VUG offers a reliable and effective way to achieve your financial goals. Now let's move on to number 2 on our list. Stay tuned as we continue to explore the top ETFs that can help you build a robust and diversified investment portfolio. Coming in hot at number 2, we have the Invesco QQQ Trust, better known as QQQ. This ETF is a powerhouse in the world of technology investments. If you're bullish on the future of technology, then this ETF needs to be on your radar. It's designed for those who believe in the long-term growth potential of tech companies. QQQ tracks the NASDAQ 100 index, which is a who's who of the biggest non-financial companies listed on the NASDAQ stock market. This index includes some of the most influential and innovative companies in the world. We're talking about tech giants and innovative disruptors. These are companies that are not just leading their industries but are also shaping the future of technology. With QQQ, you get to invest in all of them with just one single investment. This means you can diversify your portfolio without having to pick individual stocks. A significant portion of QQQ's holdings are in companies like Apple, Microsoft, Amazon, and Google. These are the titans of the tech industry, each with a proven track record of success and innovation. Technology is driving innovation across every industry, from healthcare to entertainment. The advancements in these fields are not just improving our lives, but are also creating new investment opportunities. The companies in the Nasdaq 100 are at the forefront of this technological revolution. They are constantly pushing the boundaries of what's possible, leading to groundbreaking developments and products. By investing in QQQ, you're positioning yourself to profit from the continued growth of the tech sector. This ETF offers a way to tap into the potential of the tech industry without the need to manage multiple individual investments. Now let's move on to number 3 on our list of top-performing ETFs. Stay tuned to discover another exciting investment opportunity. Coming in at number 3 is the Spider Portfolio S&P 500 Growth ETF, or SPYG. SPYG focuses specifically on the growth-oriented companies within the S&P 500. You're getting exposure to companies that are well-established with a strong track record of earnings growth. SPYG boasts a competitive expense ratio, meaning you're not losing a big chunk of your returns to fees. This ETF constantly rebalances its portfolio to include companies that are exceeding earnings expectations. It's like having a team of expert stock pickers working for you behind the scenes. Now, let's crank things up a notch and dive into the world of leveraged ETFs with our 4th pick. Buckle up because things are about to get interesting with our 4th pick. The 3x leveraged ProShares Ultra Pro QQQ, or TQQQ. This ETF is not for the faint of heart, as it offers a high-risk, high-reward opportunity for those who are willing to take the plunge. TQQQ is designed to deliver 3 times the daily performance of the Nasdaq 100 index. This means that for every 1% the Nasdaq 100 moves, TQQQ aims to move 3% in the same direction. It's a powerful tool for those looking to capitalize on short-term market movements. If the Nasdaq 100 goes up by 1% in a day, TQQ aims to go up by 3%. This leverage can lead to significant gains in a short period, making it an attractive option for aggressive traders. But it works both ways. If the Nasdaq 100 drops by 1%, TQQQ could drop by 3%. This downside risk is something investors must be acutely aware of, as losses can also be magnified. The potential for amplified returns is incredibly enticing. For those who can stomach the volatility, TQQQ offers a chance to achieve outsized gains in a relatively short time frame. If you're bullish on the tech sector and believe the Nasdaq 100 is poised for a major upswing, TQQQ can deliver eye-popping gains. The tech-heavy Nasdaq 100 includes giants like Apple, Amazon, and Microsoft, which have been known to drive significant market movements. Leveraged ETFs are designed for short-term trading, not long-term investing. They are best suited for day traders and those who have the time and expertise to monitor their positions closely. It's crucial to have a solid understanding of how these ETFs work and a well-defined trading strategy. Without a clear plan, the risks can quickly outweigh the rewards. Now let's move on to our 5th pick, another leveraged ETF focused on a high-growth sector. Stay tuned as we dive into more opportunities for those looking to maximize their returns. Coming in at number 5, we have the Direxion Daily Semiconductor Bull 3X shares, or SOXL. Semiconductors are the brains behind all our electronic devices, from smartphones to cars. As technology advances, the demand for semiconductors will increase. SOXL provides 3 times the daily performance of the semiconductor sector. Remember, SOXL is a leveraged ETF, which means amplified volatility and increased risk. Now let's shift gears and take a look at a leveraged ETF focused on the energy sector. For our 6th pick, we're diving into the energy sector with the Direxion Daily S&P Oil and Gas Exploration and Production Bull 2X shares, or GUSH. The energy sector can be a roller coaster ride with prices fluctuating based on global supply and demand. GUSH provides 2 times leveraged exposure to companies in the oil and gas exploration and production industry. If you believe that oil and gas prices are headed higher, GUSH can amplify your returns. Now let's move on to our 7th pick, another leveraged ETF focused on precious metals. Coming in at number 7, we have the Microsectors Gold Miners 3X Leveraged ETN, or GDXU. Gold is considered a safe haven asset, and when its price goes up, gold mining companies often see their stock prices follow suit. GDXU provides 3 times leveraged exposure to an index of gold mining companies. If you believe that the price of gold is headed higher, GDXU offers a way to supercharge your returns. Remember, GDXU is designed for short-term trading, and it's essential to understand the risks involved. Now let's move on to our 8th pick, a leveraged ETF focused on the housing market. For our 8th pick, we're hammering home the potential of the housing market with the Direxion Daily Home Builders and Supplies Bull 3X shares, or NAIL. The housing market has been on a tear, with low interest rates and a shortage of inventory driving prices higher. NAIL provides 3 times leveraged exposure to the U.S. home building and construction sector. If you believe that the housing market will continue to boom, NAIL can amplify your returns. Remember, NAIL is a leveraged ETF, which means amplified volatility and increased risk. Now let's move on to our 9th pick, an ETF focused on investing in the future of technology and innovation. Coming in at number 9, we have the RK Innovation ETF, or ARKK. ARKK is actively managed by Cathie Wood and her team at ARK Invest, known for bold bets on companies pushing the boundaries of technology. We're talking about companies in genomics, artificial intelligence, robotics, fintech, and more. ARKK identifies companies with the potential to revolutionize the world and invests in them before they become household names. Investing in disruptive innovation is risky, but for those comfortable with risk and a long-term horizon, ARKK offers potential to capitalize on transformative trends. Now, let's wrap things up with our 10th and final pick, an ETF providing exposure to emerging markets. And last but not least, coming in at number 10, we have the iShares MSCI Emerging Markets ETF, or EEM. Diversification is key in investing, and EEM provides exposure to a broad range of emerging markets. This ETF includes countries like China, India, Brazil, and more. These countries have rapidly growing economies and expanding middle classes. As these economies develop, the companies within them are poised for significant growth. EEM offers a convenient way to tap into this growth potential. By investing in EEM, you're betting on the continued rise of the developing world. Emerging markets can be volatile, but for long-term investors looking to diversify, EEM is worth considering. And there you have it, my top 10 ETF picks for potentially explosive returns in 2025. We've covered a lot of ground, from growth-focused ETFs to high-octane leveraged ETFs. Remember, investing always comes with risks, and it's crucial to do your own research before making any decisions. I believe the ETFs we've discussed offer diverse opportunities to capitalize on market trends. Whether you're just starting out or you're a seasoned pro, I hope this video has given you valuable insights. Let me know in the comments which ETFs you're most excited about. Don't forget to like, subscribe, and hit the bell icon so you don't miss out on future videos. Thanks for watching, and I'll see you in the next one.